Today, big oil companies ExxonMobil and Chevron report earnings. Both are back in the black for the first quarter, boosted by higher oil prices. New York City is set to fully reopen this summer. We go to Wall Street to see what's happening there. And we talk to a CEO and business leaders at different stages of the supply chain to see how they're handling the disruptions. That and much more coming up at NTD Business. Good evening, great to have you with us. Many big oil companies are making money again, and ExxonMobil is the latest to join the party. And even as the company deals with activist investors, it's seeing great returns in its upstream and chemicals business. NTD's Jasmina Davis reports.
ExxonMobil finally escaping the red ink, earning $2.7 billion in the first quarter. This as many oil companies return to profitability after a disastrous 2020. Last quarter, Exxon had a $20.1 billion loss, its fourth loss in a row.
The sector's seen a five-fold increase in energy prices since April 2020. So it's that sharp recovery in oil prices that has boosted revenue and earnings growth for Exxon and others.
Exxon's upstream business, which is mainly exploration and production, went from negative $18 billion to $2 billion, while losses in downstream, which are processes that happen between production and sales, lessened from $1 billion to $390 million. Their chemical business also increased profits from around $700 million to over $1 billion.
Chemicals performed better than expected. So with downstream refining softer than expected, largely given maintenance activity and weather impacts. Overall, we see potential for improved earnings over the year.
Meanwhile, activist investors are trying to make Exxon focus more on fighting climate change. Investment firm Engine No. 1, backed by the three largest U.S. pension funds, recently issued a public letter saying the company's true trajectory is nowhere near Paris consistency, and that under this trajectory, Exxon will grow total emissions for decades to come. CEO Darren Woods discussed Engine No. 1 earlier with CNBC.
Frankly, they're pushing us to wind down our investments, wind down the business, move into solar and wind, where we don't really have a competitive advantage, and so had difficulty reaching any understanding as to how best to move forward.
Engine No. 1 is trying to get 4 of its own directors onto Exxon's board. Voting for the board members takes place at Exxon's annual shareholder meeting on May 26th, less than 1 month from now. Jasmina Davis, NTD News.
And Amazon is reporting its biggest profit ever. People bought more online, and businesses also paid more to warehouse and advertise their products. That's 4 straight quarters of record profits. First quarter profits more than tripled from a year ago, now at $8.1 billion. Revenue came in at more than $108 billion, thanks in part to its cloud computing unit, Amazon Web Services, or AWS. Its revenue increased over 30% year over year. Andy Jassy, who has been the CEO of AWS, is scheduled to take over as Amazon's chief this summer, succeeding founder Jeff Bezos. But it's a different story for Twitter. Its shares dropped after it offered weak guidance for the second quarter. It also said user growth could slow in the coming quarters as the boost from the pandemic starts to fizzle. First quarter ad revenue was up 32%, though slightly higher than estimates. It's good, but not as good as Google and Facebook, which both blew past expectations. Advertisers apparently consider them to have better targeting capabilities and ad formats than Twitter. Twitter's user growth also fell short of expectations. Some analysts had feared that the platform's move to suspend former President Trump would hurt its growth. And the EU is accusing Apple of violating the bloc's antitrust laws. The European Commission said today that Apple distorts competition for music streaming by imposing unfair rules for rivals in its App Store. One EU official says all app developers should be concerned.
Because they depend on the Apple App Store as a gatekeeper to access users of Apple's iPhones and iPads, and this significant market power cannot go unchecked.
She says one main concern is Apple forcing app makers to use its in-house payment system. It charges a 30% fee on all subscriptions. She says that ends up costing consumers more and limiting their choices. The charges underscore the long-running feud between Apple and music streaming service Spotify. Spotify complained that Apple had restricted its access to its product in its App Store, but Apple rejected the EU charges, saying Spotify wants all the benefits of the App Store, but none of the costs. Spotify, on the other hand, welcomed the EU's move. Wall Street ended lower today. Big tech companies weighing down the S&P 500 and the Nasdaq despite those strong earnings reports. The Dow falling 186 points, or more than 0.5%. S&P 500 lost 30 points, 0.72%. The Nasdaq dropped 120 points, 0.85%. Apple, Google, Alphabet, Facebook all gave back gains. For the week, the Dow lost 0.5%. S&P 500 was about flat. The Nasdaq shed 0.4%. Treasury yields, though, have stabilized after jumping earlier this year. 10-year Treasury now at about 1.62%. And people are returning to New York City's financial district as the Big Apple plans to fully reopen this summer. NTD's Phil Zhou has more from Wall Street.
Wall Street is slowly coming back to life, with New York City set to reopen by July 1st.
Now I see that there are more people, more tourists, so it's kind of, a good feeling to see more people coming to the area.
A lot of clients coming in.
I am noticing more workers coming back. It is definitely more lively. There are more tourists out, more people.
Employees weigh their options between working from home or in the office.
I actually find myself working longer hours from home, but it winds up shorter because I don't spend an hour and 15 minutes each way commuting.
Because working from home can be difficult, so it's good that people are back, I think.
She prefers working in the office.
I get to have those organic interactions again where I can meet, people that I wouldn't normally, just new people.
There are still fewer people than before, but it's a step in the right direction.
Yeah, I've been here about 40 years, so it's changed quite a bit.
Well, I can see that there are not as many people as before. I'm here with a group of students, international students, so we're just visiting. I'm telling them a little bit of the history of Wall Street.
Some workers are celebrating the return by having a pizza party. Phil Zhou, NTD News, New York.
And shoppers returned to malls in droves in March. It was boosted by a sharp rise in personal income and strong consumer spending. Data from Placer.ai sampled 50 top-tier malls, and foot traffic in March was up 86% from a year ago. Other data released today could also be good news for the retail recovery. Personal income jumped over 20% last month, while personal consumption rose 4.2%. But the spending may be short-lived. The income rise was mostly fueled by the $1,400 government stimulus checks. In a separate report on Friday, the Labour Department said labour costs jumped 0.9% in the first quarter. That's the largest rise in more than a decade. So corporate earnings are beating analyst estimates, and we see companies like Amazon enjoying record profits. But could supply chain problems throw a wrench in the works? Mattress maker Tempur Sealy says supply constraints are holding back its growth. Household goods supplier Church Dwight's raising prices after seeing raw materials and transport costs jump during the quarter. We talked to a bunch of people over the past 2 days who are trying to navigate the challenges. Alexi Cashin is CEO at Ellen Telly Imports. I spoke with her yesterday.
So my clients have definitely been experiencing a lot of delay, and it's causing a significant ripple effect with their ability to keep continuity of inventory in their market. I would say that some of the stories I'm hearing from customers on the ground is that they're actually being forced to buy additional demand upfront to avoid delays. So whereas they might be purchasing 2 to 3 months worth of inventory, they're now buying 4 to 6 months worth of inventory to, again, avoid these delays as well as further unknown price rises.
And is this is definitely contributing to a backlog we're seeing? Is it the primary cause, or what do you think the primary cause is?
The primary cause, so we're seeing really two delays that are the most devastating. One is just that boats are waiting to dock. So these are all the pictures we're seeing on YouTube with steamship liners and filled with containers and their inability to get into port. The second issue is that once container steamships land, it's a struggle to get those containers out of port due to the backup of trucking as well as just accessing the port. So it's really, those are the two kind of main logistical challenges currently.
And is it because of social distancing guidelines? Is it because of lack of workers? People aren't going back? Any idea what's actually the root cause?
Actually, the port workers and a lot of the sort of mandates due to COVID-19, for example, in terms of cleanliness, social distancing, those are things that have been subsided and resolved over the past 16 months. So that's not the issue. The issue is really American consumption, the amount of consumer pressure coming from Asian routes. So container steamship lines that are moving from Asian countries to the U.S. is largely due to the abundant consumption of American consumers and or companies that rely on goods from Asia. What's the challenge of that is that all of the equipment and congestion is sort of staying hubbed in those routes. So we might have seen equipment or movement that moves, from Asia to the port of Long Beach and then is going to Europe. So again, because the demand is so centralized between Asia and the U.S. and the port of Long Beach in particular, it's essentially siphoning all of the activity to just those routes.
Cashin mentioned the goods are arriving at Long Beach port to a backup of trucks. JKC Trucking has trucks there for sure, but its CEO admits he'd like to have more there. But he says he just can't find the drivers.
We still need more drivers. All these drivers haven't come back to work yet. And some drivers are just sitting at home collecting unemployment. And it's kind of killing us. But also the labor force all through, like in the warehouses, there's not enough workers. People were furloughed. Either two things happened. They got a job somewhere else or they're sitting on unemployment. I have employees, which is crazy. They work 2 days, keep their benefits, and the rest of the time they're paid unemployment. I don't know how that works. We need more people to get back into these jobs and fill the positions, especially the positions that companies furloughed people, and these people moved on to other positions to put food on the table for their family. Who's going to fill those positions? All these are very key positions that cause ripple effects through the whole food chain.
So we hear that there's problems all through the supply chain, whether it's trucking, whether it's at the ports, whether it is shipping by freight, by sea. Is it a people problem? You feel fundamentally it's a lack of people? Is that where the problem is?
I mean, there's a couple things. The shutdown was too long, and then when things started to open up, everybody just hit the full throttle. And the problem is we're spinning the wheels because you can only do this. You mentioned the ports, for example. In February, the ports of Long Beach are up 50% since last year, since 2020, before COVID hit. So you could see, and that's a lot of more volume coming through the ports, and there's congestion, and it's causing issues, shortages, it's costing more in container shippings, which is and more in transportation. All that is, pushed down to the end user, the American people.
So you're saying that basically we have a backlog. We're trying to sort out a backlog. All of the things that weren't shipped during the pandemic, everybody's trying to ship them now, and it's causing this congestion.
Correct. The whole world came to a complete halt. One of the things, we produce a lot of products here in America, but what we do is we get a lot of ingredients for the things produced, food products, parts for trucks, parts for cars from other countries. And this is what's killing us. If you just saw recently on news, Volvo, the big truck producer, just shut down because they're missing key parts to build trucks. They can't build trucks because they're waiting on parts to come from other countries.
So how are the smaller retailers handling this? And how about your pocket? We're going to see prices rising. I spoke to Fernando Campos. He's a retailer. He's also the co-founder at Marketplace Ops. It helps brands bring products to market, oftentimes from abroad. I asked him what kind of problems he's seeing.
Container prices have basically doubled. So I think in 2020, they were around $5,000 per container for like a 40-foot to come into LA. And now you're looking at around like about $10,000 per container. And yeah, I mean, our team has been like really like diligent about following up, kind of looking at the stats and everything. But apparently as of December of 2020, it's kind of been at a 12-year high. And there's just a ton of delays between like the port congestions, or sometimes our freight porter will have to kind of reroute containers to other ports to get the products out of China. Yeah, it's a little bit wild right now.
Are you stocking up? Are you placing bigger orders to try and get around it as well?
That's a good question. At some points, depending on the product. If it's one of those products that you just cannot run out of, absolutely. We kind of tier them. And then so naturally, like the higher tier products we'll actually order more of just to make sure that we don't run out of stock. If it's like a lower priority product, then maybe we'll just send things more frequently. But typically, we will increase order sizes just to ensure that we don't have any issues.
What do you think for the industry as a whole? Are we going to see higher prices for consumers if this does continue for another, say, 12 months if they can't resolve it?
Oh, that's a good question. I would say it's very likely. I think there's a certain period of time where companies will absorb like kind of the margin compression, and I think at a certain stage, as things get more and more competitive, potentially they will have to like raise prices, especially if like the shipping cost is a big part of their overall product costs when getting the product here. So like for instance, if you have like a really low price point item and then maybe it's like a larger item, then naturally I do think that because like the percentage that shipping represents, then like prices will go up for a lot of those kind of like lower priced items. Like iPhones, for instance, are so small relative to their dollar value. I don't think it really makes a huge difference for something like that.
And General Motors says it will invest $1 billion in a manufacturing complex in Mexico. It's building a new high-tech paint shop that will start operating in June. The site currently assembles non-electric vehicles and also builds engines and transmissions. GM also plans to start building electrical vehicles in the region in 2023. The Auto Workers Union criticized GM's decision, though, to build the electric vehicles in Mexico instead of using U.S. labor. GM responded by saying it's recently announced nearly 9,000 jobs and more than $9 billion in new EV facilities in the United States. But GM said it also plans to build batteries and electrical components at the Mexico facility. Germany, though, has found a huge deposit of lithium, key material in electric car batteries. Geologists estimate it's one of the biggest deposits in the world. NTD's Patrick Hayden takes a look.
Germany has discovered a huge deposit of lithium in the upper Rhine River Valley in the Black Forest area. Geologists say it's one of the world's biggest deposits. It holds more than enough to make 400 million electric cars. The area of the deposit is more than 4,600 square miles. Germany's electric vehicle industry is rising rapidly. Mining companies are striving to retrieve the lithium that is trapped in hot water thousands of meters below the Rhine. One geoscience professor says China is trying to monopolize the market.
China is becoming very, very dominant and is carrying out very aggressive raw materials policies in that it is not only trying to secure primary raw materials for itself, but is starting to take over the production of intermediary products and then to sell them.
He says China now controls around 80% of the market and Germany is making itself very dependent. Skeptics are concerned about political opposition to mining in Europe's densely populated areas. German utility EnBW already has geothermal power stations and is exploring whether carbon-neutral lithium can be a profitable byproduct. It's planning to invest more than $2 billion in lithium extraction. Because of the link in Germany between lithium production and geothermal energy, its advocates say it's guaranteed to be a green solution. The European Commission has estimated Europe will need up to 18 times more lithium by 2030 compared with now, and 60 times more by 2050. Patrick Hayden, NTD News, London.
Big find. Still to come this evening. Do you want to take a trip to space? Well, you'll soon be able to buy tickets to do just that. And a California cafe gets around the bubble tea shortage by making its own ingredients in-house instead of importing them. That and more after this short break.
Here you go.
Thank you.
Thank you.
What does it mean to devote your life to the truth? Does it mean investigating communist subversion here in America? Does it mean exposing the deadly fentanyl crisis in the Midwest? We're spending late nights and covering deep government corruption? Does it mean persevering over 20 years, even after 4 masked men set one of our printing presses on fire last year? Because at a time when America's traditional values are under attack, it's the responsibility of righteous journalists to uphold truth and tradition.
You'll soon have the chance to buy a ticket to outer space. Jeff Bezos' space company Blue Origin wants to send paying customers on brief joy rides to the edge of space. Passengers will get to ride 60 miles above Earth and spend several minutes in weightlessness before the capsule parachutes back to Earth. Bezos is cashing in on $1 billion a year in Amazon stock to pay for it. Blue Origin's website says more details are coming May 5th. And Amtrak is turning 50. To celebrate the half-century mark, the rail line is offering half-off sales. You can get a fare for $50 or less per segment across the entire country. The offer is valid through May 5th, and it includes future travel between June 2nd and November 13th. You may want to take advantage of that discount to go to California because the happiest place on earth is finally open again. Disneyland in Anaheim, California held its grand reopening today, and guests were welcomed back for the first time since the pandemic forced the theme park to close. The reopening comes as Disney teases of a new annual pass program for its California attraction. Disneyland also canceled its pass program back in January because of the pandemic. The park's president announced Thursday a new program could be launched before the end of the year. For now, Disneyland is open at just 25% capacity due to state regulations. Park officials say physical distancing is also in place and masks are required for all guests. And do you know it's National Bubble Tea Day? Well, for one small cafe in California, it's a chance to celebrate its unique homemade bubble tea pearls. NTD's Ellen Eng has the story.
There's a nationwide boba shortage, but Alicia Zhao is unfazed. She's the co-owner of 360 Health Cafe near Monterey, California, where she makes her own tapioca pearls.
It's tapioca flour and water. It's filtered water and organic tapioca flour. Yeah, it's very simple ingredient, just 2 ingredients. And the sweetener we use is dark organic brown sugar.
Her goal is to make healthy bubble tea for people. The boba is organic, and the tea itself is from Taiwan. She credits her Taiwanese friend for teaching her how to make the pearls.
It was very tricky. The texture is the tapioca flour is so different from the regular flour. The texture has to be just right, otherwise you couldn't form the boba.
She makes the boba in a machine and stores it in the freezer. The next morning, she cooks it for half an hour. Zhao says some of her customers come back just for the boba. Another cafe, Boba Guys, also makes its own boba in their Bay Area factory, but they do import tapioca starch from Thailand. In an Instagram post, Boba Guys wrote, "Since we own our own factory, we are affected less, but shipping issues and port congestion will still make our inventory volatile. Cargo ships have been jamming Bay Area and Los Angeles ports for months. Consumer spending has increased, mostly due to online shopping, and has led to shipment delays." Eileen Eng, NTD News, California.
Even the bubble tea is affected. That's the latest business updates for today. You can still catch NTD Evening News with Stephanie Cox. That's at 6:30 p.m. Eastern. For NTD Business, that's all for this week. Thank you for watching. Have a great weekend. We'll see you Monday.
We have a new channel. Subscribe to us on YouTube at NTD News. Get the highlights of our news broadcast and the most important headlines that we curate especially for you.
Don't miss out on important news. Our videos are being deleted. So if you don't want to be cut off from honest news, take a moment to sign up for our newsletter at newsletter.ntd.com so you don't lose access to NTD. Go to newsletter.ntd.com to sign up for our evening newsletter.